My name is Laura Brandis, and I'm the Communications Director at the Thepolis Water Sustainability Project, which is based at the University of Victoria. I want to welcome you to today's session, which is the fourth webinar in this year's Creating a Blue Dialogue webinar series. This means that we only have one more on the docket for this season. It'll be happening next month, and at the end of this session, I'll give you the heads up on when that will be happening. One of the main goals with this series is to bring together in one virtual space water professionals, leaders, and thinkers from all across the country from a diversity of backgrounds. The idea is to engage with and discuss emerging and innovative ideas in water law and policy. So I thank you all for being here today. I really like the community that's created through this series. Many of you are veteran attendees, and if you're brand new, welcome. As you all know, today's session is going to focus on sustainable financing for watershed governance. Some of today's conversation is going to be grounded in potential opportunities in British Columbia because of the brand new Water Sustainability Act. But the speakers will also be discussing financial mechanisms more broadly. And we're also going to be joined by an additional guest from Ontario's conservation authorities. She wasn't part of the initial promo, a little bit of a surprise visit, so I'm pleased that we will have that insight as well into the financial sustainability behind the Conservation Ontario model. And I'll introduce the speakers shortly. Before we get going, I do want to acknowledge the support of our various sponsors, all of whom are listed on this slide. And in particular, I want to acknowledge the Canadian Water Network, who is the main core supporter of this year's series, and also Water Canada Magazine for being our media partner. And you may have seen Water Canada Magazine recently ran an interview with Steve Litke, who's one of our main presenters today, and I'll provide the link to that interview at the end of this session as well. Now, before I hand things over to the guest speakers, I always like to do a little bit of housekeeping. Those of you who have attended before will be well familiar with this slide, but I think it's always worth a reminder. The first thing has to do with audio. So as you will have all noticed, I have a blanket mute on everybody in the room. We're expecting over 100 listeners, so this just reduces any unnecessary chaos. This brings me, though, to point 2, which has to do with the question period. So you're all very familiar with the chat box already, and that's how we'll handle the discussion. So at the end of all 3 presentations, you guys can start typing your questions in the chat box. I'll come on as the moderator, I'll read them out, and our 3 speakers will be available as our panel. So you can feel free to direct a question to a specific speaker or to all 3 of them in general, whatever makes more sense. And if you can hold off on your questions until the end, it just makes it easier so that they aren't buried in the sort of ticker tape of the chat box as it goes along throughout the session. So I am now going to introduce our speakers, and if you haven't already, I would invite each of you to introduce yourself in the chat box. It's really nice to get a sense of who you are, what organization you're with. If you have multiple people listening on your end, how many people are in the room with you? And we already had the cross-Canada weather report, but if you want to contribute some of that as well, certainly feel free. So as I said, we have 3 speakers joining us today. Steve Litke will be kicking off today's session, and he is the Senior Manager for the Fraser Basin Council's Watersheds and Water Resources Program. In this role, Steve has overseen the development of guidance documents and multiple workshops focused on watershed planning and collaborative watershed governance. Much of his presentation today is going to draw on a recent discussion paper that was released just this month by the Fraser Basin Council and the BC Wildlife Federation. And the focus of that report is financial mechanisms and models for collaborative watershed governance in BC. And I'll provide a link to that as well as an accompanying PDF with additional tools and resources at the end of this session. After Steve, Christine Bergeron is going to be speaking, and she's the Director of Community Business at Vancity. Her work focuses within the clean tech, sustainability, and impact investing sectors. And a large component of her work involves growing Vancity's impact lending portfolio. In 2007, Christine was named one of BC's top 40 under 40 business leaders, And in 2012, she was honored with the Rising Star Award by the Association of Women in Finance. So we're very pleased to have her expertise on the line with us today. And finally, I'm also really pleased to introduce Barb Veale, who will be joining us today as a respondent. As I'm sure some of you have noticed, she wasn't on the initial webinar promotion, but was able to participate at the last minute. And as I indicated at the beginning, she's going to provide us with some insight into how Ontario's conservation authorities have achieved their financial sustainability, and also some challenges and opportunities that they may face down the road. And she'll be speaking in her role as Manager of Planning and Regulation Services with Conservation Halton. So on that note, I'm going to hand the controls over to Steve. Steve, if you want to press *6 on your telephone, that will bring your voice on the line.
Thanks, Laura. Can you hear me okay?
Yes, I can hear you. You're a little bit quiet. I'm not sure if you're able to sort of talk a little closer into your...
I will try. Hopefully that works.
Yeah, I think that's a little bit better. Great. Thanks, Steve. I'll let you take it from here.
Well, thanks very much, Laura. I appreciate the chance to discuss this topic with all the folks on the webinar. And before we get started, Laura, I don't see the buttons to scroll through the slides. When we did the test, there was...
They should be in the bottom left-hand corner of your screen. Did you have to sign in a second time for some reason?
No.
Well, if, yeah, they should be there in the sort of light gray bar at the bottom left of your screen. If they aren't there, I can certainly advance them for you if you just want to say slide as you get to the end of each one.
Okay, yeah, sorry for that disruption. They're just not there. They were there first thing this morning, but not now. Anyways,
Okay.
I'll carry on, and I guess before I do, I want to set a little bit of context, and that is, as Laura said, we're presenting the findings of a discussion paper we prepared, and we did this work in 2 rounds, and I want to acknowledge Jessica Hawkins and the Ministry of Environment for contributing funding. Jessica and I did the first draft of this paper a couple of years ago, and then more recently, with some funding from the BC Wildlife Federation, Teresa Fresco, my colleague here at Fraser Basin Council, helped do a second pass on this discussion paper and give it a bit of an update and include some additional financial mechanisms. And so, yeah, I just wanted to acknowledge those collaborators and funders on this work. Next slide, please. And I guess before we get into the finance piece, I did want to talk just very briefly about collaborative watershed governance and just put some words around what we mean by this at Fraser Basin Council. And really we're talking about collaboration among many different organizations that have roles, responsibilities, decision authority, but also influence in terms of what goes on in watersheds. And governance is really about managing our impacts, the impacts of our human uses on watersheds for their long-term health and sustainability. And so one of the common challenges is the lack of sustainable financing. While there's less resources available presently than, say, historically for projects and program delivery and monitoring, what we're going to focus on today is that sustained financing, particularly for core operations of a governance organization. Next slide, please. And so, as Laura had already identified, part of the impetus for this work is with the Water Sustainability Act and the fact that there are provisions in the Act to enable alternative governance arrangements. So if groups are going to form at the local or regional level, how can they really set themselves up with a solid financial footing? And regardless of the Act, though, there has been a rise in community-led watershed organizations in BC and in other parts of the country, and a growing interest at the local level to get involved and have some influence, if not a direct role in decision-making. And I guess another set of issues that may be addressed through collaborative governance is that historical fragmentation of different jurisdictions and management authorities and just a lack of coordination and limited resources in each of those agencies. So collaboration is really intended to pool those resources and make shared decisions for the benefit of watersheds. Next slide, please. And probably most of you on the webinar and on the call are familiar with the Thepolis blueprint, so I just wanted to ground some of this work in the 9 winning conditions. So really we're focusing on that sustainable long-term funding. The discussion paper does talk about other financial mechanisms, other sources of funding, but I think for today we'll focus on those that are most likely to be sustained over the long term. Next slide, please. So for this discussion paper, we're really focusing on the wide range of common, available, and in some cases innovative financial mechanisms, and then also looking at models. How have different organizations brought those different mechanisms together as a funding model to support their operations and their work. Next slide. And so we organized, this work was undertaken through a literature review as well as looking at some case studies and seeking input from a range of advisors. And we grouped the different financial mechanisms into these categories. And it really has to do with who has the, who holds that mechanism. So we look at some senior government sources of funding, local governments, First Nations, NGOs. We also look at a number of different financial management tools, and I'll get to that in a little bit. They're not really sources of new funding, but they're ways to manage those funds once you have them. And then a couple other examples around recreational user fees and ecosystem services. Next slide, please. So I'll just go through a couple of each of the examples of each of those categories. So when it comes to senior governments, provincial and federal agencies, obviously taxes are a key source of revenue for senior governments, and in some cases those revenues are deployed out to communities and other organizations as grants. And then the other sort of mainstream of revenue is related to natural resources. So in the realm of water, there are fees for water licenses, and then there are annual water rentals. And so I would characterize both of those kinds of funding or sources of funding as sustainable. I don't think these are going away anytime soon, but there is a hesitation or reluctance to increase taxes as well as fees and rentals. So there may be some limited opportunity there, but there certainly is some potential for funds generated by senior governments to flow back to watershed governance organizations. Next slide. There are really quite a wide range of financial mechanisms available for local governments. Property taxes are the primary source of revenue, no surprise to anyone, but there are a number of other kinds of parcel taxes that particularly regional districts have employed in recent years. So, and also historically. So a couple examples, the Okanagan Basin Water Board was given authority through their enabling legislation to charge parcel taxes, and that secures some revenue for the work that they do. I believe it's East Kootenay Regional District has set up a conservation program, and they secure the funds through a parcel tax, and then park that in a conservation fund that can then be rolled out to invest in different kinds of restoration projects, monitoring, and other things. Utilities are another important mechanism for local governments to set up a utility that provides a set number of services. Drainage utilities are probably one of the more common ones to deal with things like stormwater and rainwater management. And we really haven't looked at the application of those utilities for watershed governance, but we do think that there is some potential there. And there's some other examples as well available for local governments. And I do think that, including water pricing, so a lot of local governments are water suppliers, and they do typically charge some kind of fee or price to at least offset the costs associated with delivering that potable water to its customers. And so like the province, that pricing is going to be a long-term sustained source of funding. And I do also think the parcel tax, some variation of that, holds a lot of promise in terms of, for those watershed organizations that have local government as a key partner. Next slide, please. In terms of First Nations, I think we really just scratched the surface and offer a couple examples. There is some infrastructure funding and grants available for infrastructure. First Nations can also access funds through nonprofit foundations, some of the government funding programs, some of the stewardship type funding that's available for non-First Nations, also available for First Nations. Probably the most significant is impact benefit agreements. So where there are agreements signed between First Nations and a private sector entity, typically related to natural resource development, those agreements enable the flow of revenues and in some cases jobs and maybe other benefits. So that may be a good source for First Nations. We didn't really come up with a really clear path forward for First Nations with respect to sustainable funding, but we do see First Nations as key to collaborative watershed governance in British Columbia, if not other parts of Canada. Next slide, please. NGOs, typically NGOs access funding for projects through different granting programs, whether it's foundations, private sector, or government grants. Social impact investments is an emerging area, and there is some work around environmental impact investments. I'm not an expert in this area, but we do see some potential there. One challenge in terms of, or that we anticipate for watershed governance is that with social impact investments, it's really well suited where there's a clear, tangible outcome. So people are investing in something, and in a fairly short timeline, they're going to see some impact or outcome or benefit from that investment. And if we're talking about sustained funding for the sort of operations and sort of core work of governance entities, not quite sure if that's a natural fit, but certainly should be considered as part of the suite of financial mechanisms. Next slide, please. So I did reference before financial management tools, and this is a way of, so there's reserve funds, there's trust funds, revolving loan funds, and endowment funds. And while these aren't sources of revenues or finances, they are important tools to consider to manage those funds. So if funds flow in from a variety of mechanisms, they can be put into these types of funds and then, I guess, to provide some stability and sustainability over time, to bridge fiscal year constraints and things of that nature. Next slide, please. And then the last area, there was kind of an other category, and we looked at recreational feeds. There are some examples, and I neglected to mention, there's a number of case studies, but also smaller examples throughout the paper to illustrate how some of these mechanisms work. One I wanted to mention is the license fees and or surcharges on fishing and hunting licenses. Is an important opportunity, and Freshwater Fisheries Society is one example. Habitat Conservation Trust Fund is another. The salmon stamps provide a really important long-term source of funding for the Pacific Salmon Foundation, and there is some work and some discussions with the province about setting up something like the Freshwater Fisheries Society for wildlife. So those kinds of recreational uses of watershed resources may be another area where we can derive some additional revenue and dedicate that for reinvestment back in the health and sustainability of watersheds. And I guess the last example I wanted to mention is the idea of paying for ecosystem services or paying for downstream benefits. And I think there's great potential here. There's just some question marks around how can we formally integrate this type of a system into mainstream economy, into the market, if not into regulatory pricing. So link ecosystem services and benefits to resource royalties and rentals and fees. So perhaps there'd be a range of fees depending on the ecosystem benefits or impacts associated with those activities. But there's some more work that needs to be done there. We just really scratched the surface there. Next slide. just a couple more slides. One, in our research, we identified these kind of criteria to help organizations assess the suitability for different financial mechanisms, and that long-term sustainability or stability is one of those, but there are also a number of other criteria to consider. And then I just want to wrap up with a couple recommendations from the paper. Next slide, Laura. Because there really is no silver bullet or panacea when it comes to funding, I think it's really key to secure a suite of or secure funds from a suite of financial mechanisms, and the mix that's appropriate will vary. What we did find is that no two watershed organizations are alike. The circumstances, the uses and pressures on watersheds, and the sort of governance structures vary quite significantly from one watershed to the next, and the mix of funds that are best suited for them will also vary. But regardless of that collaborative approach and the idea of bringing together diverse partners in a governance organization ought to strengthen the ability of that organization to secure funds. So if local government is a key partner, if First Nations are a key partner, then they can bring those revenues that they're best suited to access. And then couple that with NGO funding, in-kind contributions, volunteers, and maybe build up something that is viable. And I guess the other piece to mention is just if there may be some way to support core operations and administration and overhead within project-based funding. So if a fund allows for charging those types of fees, then do that to support those core operations. That won't cover all of it, so there is a need for those sustainable sources for that administration and core activities. Next slide. And I guess I just want to reinforce again, use those different financial management tools to better manage those funds, to spread them out over multiple years, to dedicate it for watershed work, to protect funds from being drawn into general revenue. And then I think the last recommendation is if we're talking about delegating governance arrangements or enabling alternative arrangements and supporting local or regional scale decision making where those decisions might have been made in the past by the province or another senior agency, then there is a case to be made to provide additional financial resources with those new roles and responsibilities. So I think it shouldn't be left entirely up to local or regional entities to secure the funds necessary when they are taking on new roles and responsibilities. And then the last slide I just wanted to share is, I mean, we can get clever in terms of which financial mechanisms and which policies. Next slide, Laura. But really there is an important human element to keep in mind. The funding is fine and it's absolutely necessary, but if we don't build strong, enduring human collaborative processes and good, strong relationships founded on trust, mutual respect, then those funds may not be applied as effectively as they could be. So let's not lose sight of the importance of a good, solid governance structure and then enable them to do their work with those financial mechanisms. So I'll stop now and pass it back to Laura and the other speakers and look forward to our Q&A and discussion and conversation. Thank you.
Great. Thank you, Steve. So Christine, if you just want to bring your voice on the line.
Great. Good morning, everyone.
Perfect.
So thanks, Steve, for your comments, and I thought it might be best to provide just a very short overview of myself and Vancity to provide some context on my comments. Laura gave a brief intro. My background is actually in venture capital, where I financed clean tech companies. So as part of that work, we invested in water companies and really looked at the supply chain of that. So we looked at treatment and wastewater, ozonation, water efficiency. And then I ran a hedge fund where we did a significant amount of research on public water companies, which gave a different perspective on areas like smart metering and tiered metering, just as an example. And so to be perhaps very clear, my expertise is not in large water projects, and looking at everyone's comments in the chat, I'm actually really looking forward to hearing your thoughts and suggestions given the breadth and depth of knowledge that's on the webinar. So I look forward to that, and hopefully my comments will be of some interest. So to start, just for those who aren't very familiar with Vancity, we are Canada's largest credit union, at times ranked as the 10th largest financial institution in Canada. And we are BC-based, and the vast majority of our work occurs here in British Columbia. We are generally focused on the Lower Mainland and the Greater Victoria area, though as recently as a few weeks ago, we did open a branch on Cormorant Island in order to serve the needs of that remote community. Our vision as a financial institution is different from most. It's really about helping to redefine how we look at wealth. And so the key for us in all that we do is really about building healthy local communities. And this means looking at the environmental, the social, the cooperative principles that are unfolding in the community. Environmental sustainability obviously plays a large part of that and has been one of our core pillars throughout our existence. So in addition to providing the financing, again, as an FI, we take a very deliberate approach to think more holistically and to take an ecosystem view in supporting the positive impacts in our community. So for example, if we're looking at financing a local food producer, which provides numerous benefits locally, we also look to support the supply chain to build capacity with entrepreneurs. We might work with government as much as we can to find better solutions. And so we understand the benefits of supporting local food tie into the environment as well, and looking at the local health and then local business. So it's quite different from how many people would look at financing something, but we feel it's important. Otherwise, you're sort of financing, one aspect of a larger ecosystem, and as most of you would know, that may not get you the results that you're looking for. So we are also, in certain circumstances, not always, but often, a patient capital provider, in that we have various programs in place that allow us to take a longer-term view than many financial firms. And so, for example, we can structure some of our lending, some of our financing over longer periods of time. We can be flexible in what those terms are, and we feel that that's required in order to build strong social enterprises and to make the difference along the way. We also have our Vancity Community Foundation, which I'm not a part of, but if you're interested in some of that work, I can put the link up after I'm done speaking. So just to respond largely to Steve's comments in reflecting on those, there are many of the financial mechanisms that he mentions that I think are actually quite difficult for a financial institution to really influence or take part in, such as some of the senior government comments. And if there were, they would probably actually be difficult for an organization of our size at Vancity to support sustainably. But I'll come back to this because it clearly doesn't mean that others could not. One area where we have and we are looking to support relates to smaller water systems. We've spent a significant amount of time trying to look at how we can finance that sector. For us, one of the challenges is that often these systems are outside of our typical trading area, which just does pose some additional challenges on, how do we do our site visits and how do we do our diligence. Nevertheless, we are continuing to investigate that. We also need to ensure that we have in-house knowledge and that we can champion some of these areas. And admittedly, we haven't fully cracked that area yet. We do have some expertise, but we continue to investigate it. For First Nations government, we have provided strong support to many First Nations governments for various financing. And, if we think of energy generation as an example, and we would certainly be interested in doing more of that, even though currently we have not. So I would love any input on that after. With respect to non-government, so we do provide significant grants to the community. again, through Vancity itself and then also through a foundation. And we are always looking at how to better that social impact. So again, really interested in thoughts on how to collaborate. And then with respect to infrastructure upgrades in general, we'd like to be involved in some of that, but again, due to our size, it's not always possible for us, so we would have to look at that in collaboration with other financial institutions. Sorry, I don't often do webinars, trying to multitask. So finally, I do think that when speaking from a social finance perspective, it's important to talk about the other areas of investment where financial players take part. So separate from Vancity, as mentioned, having done different types of private investing in the areas of clean tech and sustainability, I do think that there are large pools of capital that are looking for long-term yield. And as such, water investments can really offer a compelling alternative investment class to some investors. It's long-term, it could be a regulated rate, it's inflation protected, less susceptible to economic cycles. And those are really strong selling points, if you can get the structure right. The challenge, of course, is, as all of you know, you can see that it can be capital intensive. You have to know how to navigate the industry, and it's really not for everyone. To Steve's comments, just that, at times the timeline might not fit. It might not be viewed as a big return, so you've got to think of it as the longer-term stable return. I think as well, you could really dive in, and I'm sure many of you have looked at this and have more knowledge than I on public-private partnerships and how you could better optimize those. It's not my area of expertise, but given some of the benefits to water investments overall and the value that could be ascribed, I do think that it could be appropriate. And again, it can be a longer term view, so you need to find the right private capital. The exit horizons are usually longer than what a traditional market investment would be. And often the better fit for a financial institution or an investor is really in the areas of technology innovation. And I do think this is quite important in that, again, if you're thinking about the broader ecosystem, it may not, you may not see those benefits within a year, but over the long term, we do need to be thinking about how to increase efficiency overall, what type of metering can we do, tiered pricing, rethinking overall how we're eliminating the waste. And it's not directly linked to that broader governance, but I think in the longer term it really matters. And we've seen that in areas, I was speaking to someone the other day about this topic and this webinar, and they said, well, it's BC, we don't really have to worry about things like desalination and purification and all these other areas. And I thought, well, perhaps we don't right now, but you never know, right? If you're thinking long term, which all of you do, 10 to 20 years out, I think having better technology in all of those areas will serve people well. And so that's, my view is really trying to think about that full area and how can you provide impact along the way. And I think just to finish off in response to Steve's comments on the social impact investment, I do agree that there is often a specific outcome that's desired, but it may be something where you could structure a green bond or a social bond and link it to water that could match up timelines and provide the consistent yield. And so I do think there's additional interest, and I do think it's really figuring out what that creative solution is to make it win-win for everyone coming to the table. And I look forward to everyone's input later. Thank you.
Great. Thank you, Christine. So our last speaker today is Barb. And Barb, if you want to bring your voice on the line.
I'm going to test right now. Can everyone hear me?
Yeah, we can hear you loud and clear.
Laura's the only one who can talk to me. Good morning, everyone. I'm happy to be able to participate in the webinar. I have 2 slides, and I wanted to set a context around Conservation Authority. I know I recognize many of the names on the participant list, but there are other names that I don't know of people, and so I thought maybe I would talk a little bit for a few minutes about the conservation authorities in Ontario. They are watershed organizations which were set up by legislation, provincial legislation, called the Conservation Authorities Act in 1946. Most conservation authorities, and there are 36, have been established between 1946 and about 1980. And what the legislation allows is for municipalities within a watershed to band together to create a watershed organization and to undertake programs on a watershed basis that address the local water and resource problems within that particular watershed. And one of the fundamental principles is the sharing of funding between the province and the local municipalities through the Conservation Authority to actually implement those programs. So over the years, there's been a wide range of programs undertaken by various conservation authorities across Ontario. Most of us are involved certainly in watershed planning and management, and more specifically in water management, floodplain management and hazard management, natural hazard management, so soils, erosion, wetlands, shorelines along the Great Lakes. We're also involved in stewardship programs or outreach programs to local landowners, particularly in the rural community. Those programs have matured over the last number of decades. We're also involved in outdoor recreation. Many conservation authorities have what we call conservation areas or conservation parks for outdoor recreation, and many of the lands were purchased in association with flood management control structures and so on. We also administer Ontario regulations to keep development outside of natural hazard areas. Many conservation authorities have land acquisition programs. And finally, outdoor recreation is something I think that all conservation authorities are involved in to one extent or another. So how are we funded? Well, this slide shows sort of an amalgam of all of the funding that conservation authorities have. You can see that the majority of funding, 45%, and again, this varies across municipalities, but about between 30 and 45% of most conservation authorities' funding comes from municipal levies. So under the Conservation Authorities Act, the municipalities, the member municipalities decide what their per capita cost or expense is going to be for the programs and set their budget accordingly. Another 14% comes from provincial grants and special projects, and I'll talk about that a little bit more. It used to be much higher, as I indicated, when conservation authorities were established in the 1940s. It was more like a 50-50 split between the municipalities and the province in terms of funding various programs. And about 3% is provided through federal grants and contracts, and then about 38%, a large chunk, is self-generated revenue, and I'll talk a little bit more about that as well. The conservation authorities across Ontario really range in terms of their geographic extent, the number of staff that they have. So in 2012, when I did a little bit of research on that, the number of full-time staff and expenditures ranged from 7 in one conservation authority with an annual expense of about $1.1 million to over 1,000 employees with an annual expense of $85.2 million, and that's the Toronto Region Conservation Authority. Funding for capital projects, maintenance of infrastructure, program delivery is obtained mostly from the municipalities. the province and from self-generated revenues. The watershed municipalities decide on the level of funding that they provide collectively to their conservation authorities through an annual vote by the Board of Directors. The Board of Directors are made up of representatives from the various municipalities within the watershed. Certain activities are eligible for shared funding with the province, including maintenance of water control structure, infrastructure, major maintenance and capital costs, and drinking water source protection planning. The province also allows tax exemptions on conservation lands and tax reductions on farmland and managed forests. Conservation authorities can also raise dollars from renting land, generating hydroelectricity. For instance, at the Grand, where I was formerly, hydro is generated through the dam structures at two of the large dams that we had. User fee at Conservation Authority parks. Conservation Halton owns and operates Rattlesnake Point, Kelso. So if you've been in Ontario on the 401 coming through Milton, you can't miss Kelso. It's also a ski hill that attracts about 500,000 people per year. So Conservation Halton gains a lot of revenue through the operation of that particular park. As I mentioned before, conservation authorities also have regulations that apply to hazard lands such as valley lands, floodplains, watercourses, wetlands, shorelines, and adjacent areas. And permission is required from the Conservation Authority to develop in these areas, and fees are charged for permits. So Conservation Halton generates about $400,000 a year through the review of these permits. In addition, through a Memorandum of Understanding with the local municipalities, conservation authorities also provide environmental reviews of planning applications under the Planning Act and can charge fees for this service. The fees are to cover the cost of the review and nothing more. Last year, Conservation Halton generated about $1.2 million in plan review fees, and that's because I think we're the hub of all development in Ontario. It seems that we're very, very busy, and of course Milton and Oakville are one of the fastest growing areas in Canada, so we're kept hopping in Halton. Also, many conservation authorities have associated charitable foundations. These foundations are usually made up of business leaders in the communities within the watershed, and they help to raise funds for special projects that the normal budget wouldn't cover. So things like trails and other recreational facilities, tree planting, water festivals and forest festivals, things like that. So that's another revenue source for conservation authorities. Just wanted to spend a couple of minutes on the challenges that we have across Ontario. I think that conservation authorities vary in size and in the number of people that live within the watershed that can support the organizations. So we have very small conservation authorities and also very large conservation authorities. So there is an equity issue among conservation authorities. Not all have the same ability to be able to generate funds. But again, then the nature of the problems that they have to resolve may not be the same as well. With the conservation authorities model, it's a lot harder as well for smaller rural conservation authorities to generate funds if they don't have a population base to support the variety of programs. So they have to go out and look for grants and other sources of funds to do the programs that they would like to do. And I guess the third challenge that we have is that many of the conservation authorities have water control structure, infrastructure, dams and dikes and so on, and it's just like roads and other municipal services that require constant maintenance and funding to support repairs of existing infrastructure as well as new infrastructure. So that's a challenge for conservation authorities because they can't access some of the provincial funds that the municipalities can for hard infrastructure. So I think with that, I will finish up and we can open up the discussion then, Laura.
Great. Thank you, Barb. So yeah, as Barb said, now is the time to get all your questions out there. And while you guys are starting to type, I'm just going to pull up the additional resources that I had mentioned earlier. So I've got a pod here, and all of these will take you to various websites. So you can see both of the reports that I mentioned from the Fraser Basin Council. Those are the two bottom entries there, Conservation Ontario website, the interview that Water Canada recently did with Steve Litke on this topic, as well as a few other finance-inclined resources that may be of interest to you. So there is one question. I guess the first thing we should check, Barb, Christine, and Steve, can you all unmute your line? Just make sure that all three of you are there.
It's Barb. I'm here.
Okay, great.
Hello.
That's Steve. And what about you, Christine?
Yep.
Great. Okay. So we did have one question come in already from Dolores Broughton, aimed at Barb, asking what is the role of the public in Ontario conservation authorities? I know you talked a bit about the fee-for-service stuff. Is there another role that the public might play?
I guess maybe I would ask Dolores in terms of is she talking about funding from the public?
So Dolores, if you're able to clarify your question a bit in the chat box there, we can sort of get to the bottom of it. I did also have a private note from, let me confirm who it was from Reg Whiten. His chat box for some reason isn't working for him, so he sent me the question separately, directed at Steve, asking, can you elaborate on the experience with the idea of local service area designations for regional districts under the Municipalities Act, and a function to support watershed stewardship in unincorporated communities or areas. For example, the Okanagan, for example, the OWB taxing applies across the entire regional district for their organization, but does it also support local organizations' core operational funding needs? I'm not sure if that's clear to you, Steve. I'll paste it into the chat box here.
Yeah, it's a big question, a lot of different elements to it. And I don't have sort of firsthand experience on this, but we did see regional districts. So I'll use regional district of Nanaimo as one example. So and I don't know if it's exactly the mechanism that Reg was talking about, the service areas, but essentially the idea is setting up an area where additional services will be provided, and in some cases a referendum is required, and people vote to approve that, or I think there is also an alternative mechanism to get that approved. Yeah, so I think that can work. I think one of the challenges with all of these is the need for public support and political will, and I think in some cases a local crisis might prompt that support, that public support and political will. In other cases, hopefully we can get there through more of an educational process where people raise their understanding and appreciation of watershed health and how they benefit from that, and so they'll be in a position to support paying a bit more at a local scale to look after those local resources. But I'm not really answering the question from Reg. I think he's looking more for sort of the mechanics of how that works and kind of step by step. And I just don't have that firsthand experience.
Okay, thank you, Steve. A question from Susan Lapp. I'm thinking this one's directed towards Barb, asking, can you provide a specific example of a small authority that is unable to provide enough financial basis how they accessed funds? Where did the funds come from and how did they access them?
Okay, so I think in my presentation I talked about a range of conservation authorities in terms of size and ability to raise dollars. And one of the small conservation authorities with 7 staff and a budget of $1.1 million was Catfish Creek Conservation Authority, which is a small conservation authority along the north shore of Lake Erie. Every conservation authority has the ability to raise funds through municipal levy. And as I said, it's something that the board of directors votes on. So Catfish Creek will have a certain level of sustainable funding through the municipalities, and I'm not sure what the percentage would be relative to the total revenue that they bring in, but for maybe some of the smaller ones, the proportion is larger than for the larger conservation authorities because their ability to raise funds from other sources is maybe limited. So I think most conservation authorities do have at least day-use parks or parks where people pay to come in so they can raise funds through fee-for-service for recreation, as well as through the plan review and permitting process. So there is a sustainable level of funding for each conservation authority. It's just the amount that's available may be different. And for the smaller conservation authorities that have a smaller geographic area, the issues and the extent of the issues may not be as great. So they may not need as much funding as a larger conservation authority would. So there is that level of sustainable funding through the structure of the conservation authorities in their ability to be able to levy their member municipalities. So I hope that answers the question.
So the next comment/question from June Ross, Christine, a little bit more clarification, I guess, on the public-private partnerships. She's saying she's worried since many of us are trying to escape corporate control. So when you talk about public-private partnerships, does that not put us back under corporate control? Do you have any comments?
Sure. I mean, I would just say certainly that was not the intention of the comments, but at Vancity we're member owned, so it ties into some further comments on public involvement. We're not shareholder based, so every member has a vote. And I wasn't really thinking specifically on control, and we haven't done personally significant P3 work. So it was really as an option, and I suppose it always depends on the details in the structuring. But I think it's really having I think it's finding the balance, right? It's certainly nobody would want this quote-unquote corporate control, but if there's a way to come together to provide more sustainable financing, then I think it's probably worth exploring. But, I don't know if that answers it. I don't have any further thoughts on that.
Great, thank you. Next question from Jen Miles, wondering if anyone, so open to all three of you, has suggestions on simplifying inclining block rate structures. She says we currently have 5 tiers and is wondering if 3 might be better.
Steve here. I don't have a comment on that. I haven't looked specifically at that. But I mean, the principle of block pricing makes sense in terms of not only raising revenue to reinvest, but to provide an incentive for conservation. You pay more per water the more you use, or per unit of water after you pass certain thresholds. I think simplification makes sense. I don't know if the magic number is 3 or 4 or 5 blocks.
And Barbara, Christine, do you have any experience with that at all?
I really don't have anything to add. It's Barb.
The one thing that may be of interest, Jen, is the Thepolis, I have the link, the second one down in the list here, our primer on conservation-oriented water pricing. It's a few years back and it hasn't been my main focus lately, but I think there is some discussion about this in that handbook that we released. So you may want to download that and take a look as well. So a comment coming through from Rick Simpson, he says, just an experience-based comment. Underlying multiple financial management mechanisms is the capacity to fund a dedicated and effective full-time grants person or team. Since most funding sources are known and tapped, and application processes are highly competitive for increasingly scarce money and support. So I think most people would probably agree with you, Rick. I don't know if any of the panelists have any thoughts or comments, suggestions based on that.
It's Steve here. I think this is a good example of one of what I would characterize as one of those core operational activities. So it's outside of a project. There's some work needed to raise the funds. And so not only for a grant writing person, but other aspects of coordination and liaison with partners and doing community education and outreach, and the financial management as well. So all of those things I would characterize as like the core operations of a watershed organization that need that sustained funding to support, in addition to the project-based funding that is related to those grants that Rick's referring to.
Great. Barb, I think maybe one of the things that I could add is that I think it's really important to be able to tap into a range of funding mechanisms because, for instance, the conservation authorities, we certainly have people that spend time writing grant proposals and so on for particular projects, but the beauty and the luxury of having that sustainable operational funds coming in through the municipal levies is that you don't have to have necessarily a dedicated team for that purpose, because you've got the luxury of that sustainable funding base to look after your core programs.
The next question from Kim MacLeod saying, further to public involvement, are members of authorities appointed or elected? So I think this is conservation authorities again.
Right. And it sort of goes back, I guess, to Dolores' question about public involvement. And there are certainly lots of different ways that the public can be involved in the work of the Conservation Authority, either through stewardship programs or through partnerships that we have with NGOs like Trout Unlimited, Ducks Unlimited, Ontario Nature, WWF, so we certainly work with the public on different programs. But in terms of the decision making, the Conservation Authority's members are appointed by the municipalities that support the Conservation Authority. They can either be elected officials or they can be citizens at large. So Conservation Halton has about a third of its board that are citizens at large, and the rest of them are local councillors. So there's a mix. At one time we used to have provincial appointees as well, and they were people with an interest in conservation, and I think that it's a shame that the province decided to withdraw that, because I felt that those members also provided an important perspective. But currently, Conservation Authority boards are a mixture of citizens at large and elected officials.
Great, thanks, Barb. Question from Coral Brown. Do we know if the BC provincial government is planning on setting up watershed protection plans?
It's Steve here. I guess the comment that I would make is well, it's too early to know. The Water Sustainability Act does have provisions to establish what they refer to as water sustainability plans. I think those could be undertaken on a watershed scale, but there's a lot of work that has to be done to develop the regulations that will outline the requirements and the terms and parameters around that planning. But there is potential there.
Great, thanks, Steve. So if anybody has any further questions or comments, now's your time to type them out. It looks like a couple people are typing. Oh, good, Reg, you got your chat box working again. So just an FYI from Reg there, stating that both the Northern and Southern Development Trusts in BC have municipal government support of $8,000 per year for grant writers. Coming back to, I forget whose comment that was now about the grant writing. So comment from Marnie Turek. While municipalities need to have a role in furthering watershed governance at a local level, they need support and resources to do this. The City of Coquitlam, she says, has been very innovative in the assistance that they provide to the Coquitlam River Watershed Roundtable. So just one example there that folks may want to look at further. I don't know, Steve, if you looked at that example at all in your research?
We have, not so much on the financing, but in other aspects of governance, and really it's a good structure there, the round table, and Teresa has done some research that profiles different kinds of governance structures, and that's one example that we share with others. We're working with a group in the Nechako and a number of different governance structures that we presented to them. That Coquitlam Roundtable is the one that seemed to resonate the most. The combination of a broad roundtable and a core committee, getting a little bit away from the financing, but I agree there is a role for municipalities. I think the regional districts have a role to play in bringing in some of the rural lands and more of a regional perspective that watersheds benefit from. But yeah, also that need that Marnie's identifying for support of resources to do that.
So a bit of a conversation here as well between June Ross and Ian Stephen, asking if anyone else sees this as a downloading of provincial responsibility. Ian's comment being that it's more of a drawing down, and this certainly aligns with a lot of our Polis sort of research and recommendations that watershed governance, of course, will require local capacity, but if it's coming through the Water Sustainability Act, the province does need to, sort of be the place where the buck stops. And that's why this conversation on sustainable finance is so important, because if more local entities are sort of expected to take on more responsibility, how can, that be shared? How can that be financed? There's a whole bunch of sort of elements, and the province needs to, of course, still be involved as the sort of background. I don't know, Steve, if you want to add anything to that.
Well, I guess the comment was what was behind that last recommendation in the discussion paper is if there are going to be, it's going to be a delegation or a drawing down of roles and responsibilities, whatever language you choose to use, then that there's a case that should come with some supporting resources. Yeah, I think that's it.
Great. So I'm going to plan to wrap up in the next couple minutes. It looks like a few folks are typing. I don't know if those are questions or not.
Laura, if I could throw in one other comment in terms of the downloading question. I think there may be some activities where there's efficiencies of scale that would be just better suited to retain at the provincial level. I mean, it's not for me to say, but I think of something like data management and monitoring systems, and you can do some of that at the local scale, and that's quite appropriate. But in terms of managing that data and stewarding it and archiving it, there's probably some efficiencies to do that at more of a provincial scale. And there may be other roles as well where there is a case to retain that or strengthen that within the provincial government in conjunction with local and regional watershed governance. I don't think it's all one or the other. We just are kind of feeling our way in terms of what's the right mix and the right sharing of responsibilities, so we have a complete package of monitoring and science and planning and decision making and implementation.
Great, thanks, Steve. So this may be the final question from Jason Unger, asking, are there examples of collaborative governance bodies investing in land as income sources? Most are risk adverse, no?
Well, I guess the one example, it's not really a governance body, but the Columbia Basin Trust comes to mind, and they generate pretty significant revenue from operating hydroelectric facilities, and along the lines of what Barb had talked to with some of the conservation authorities. I'm not aware of any examples in BC. I guess maybe I'm misunderstanding the question. Is it the idea investing in land in terms of speculating and flipping that for a profit, or is it more investing in land to generate fees like campground fees and recreational user fees, that sort of thing? So
Jason, if you want to clarify that in the chat box, maybe Steve can give a better answer. Likely the latter, he says, Steve.
Yeah, so I think, I don't have specific examples, but I think that could be done. But
maybe I could just jump in because the conservation authorities, as I said, they were set up in the mid 20th century, I guess. And one of the things that they did was look for land that had a lot of recreational educational potential. And those lands, for instance, the Lower Gorge Park, are operated on a fee-for-service basis. So it's not just looking at the land to generate funds, but that's sort of a side benefit from having public lands available to the public. So, and I think the same with any other sort of opportunity that comes up. The land has been purchased for one reason, and generating fees from it is an opportunity and a side benefit, like hydro generation or gravel extraction from reservoir sites and things like that. So it's just not one all or nothing. There are some side benefits.
And Barb, as you had identified before, with those opportunities, there are operations and maintenance costs as well. So people need to think that for that ahead of time.
Yeah.
So sort of specific question from Ellen Leslie, saying that Hornby Island is one of the BC Gulf Islands. It's a unique watershed, as islands are/can be. Hornby Water Stewardship is a small volunteer organization that's been working for 26 years on water issues. They need money, not a lot, but we do need assistance to move to the next level with research and for connecting with other island groups to discuss similarities and differences, how we can work together, things like this. So I guess just canvassing any ideas where money can be found.
I mean, there are a number of programs. I guess the question is, what's out there that sort of aligns with what you're wanting to pursue on Hornby Island? So, there's a wetlands conservation program, and there's the Pacific Salmon Foundation has the community salmon program, and there's other restoration type funds. But that's sort of what I'm kind of reading between the lines in the case of Hornby, and I don't really know Hornby Island, but setting up an organization, doing some planning, doing some research to get at the sort of nature of the issues or challenges or conflicts. Those are typically outside of most of the funding envelopes. Some programs, I mean, the Real Estate Foundation of BC comes to mind. I mean, they've supported a lot of amazing work in the world of water and watersheds around the province. And it's a bit broader in scope in terms of it's more than stream restoration. So that maybe is one example to take a closer look at. Teresa, sitting beside me here, also mentioned it's an increasingly tapped but still untapped resource, and that is working with universities and research institutes. Depending on the work that's be some great opportunities to collaborate with students and professors doing research.
Great. Thanks, Steve. And just a comment from Rick, I think we'd need to sort of see what the interest was, but he's wondering how this webinar might be followed up with specific funding case studies that we could all learn from. So I could certainly file that away, Rick. I'm not sure, Steve, if you, from your research, have any plans to do that sort of thing.
Well, in the discussion paper that I talked to, and it's one of, I think, the last items on the resource list that you've got, we sort of touch on a number of examples, but we go a little bit more in depth with 4 case studies, and it includes the Grand River Conservation Authority, Okanagan Basin Water Board, Regional District of Nanaimo, and the City of Portland with their stormwater utility. So there are some specific examples that look at how each of those organizations combine different sources of funding and linked it to work that they were pursuing.
Great, thanks, Steve. So once again, those are the last 2 links in the list that I have on the page here. The financial mechanisms and models for collaborative watershed governance in BC, released this month by the Fraser Basin Council. So I think that we're going to wrap up the chat box now, and I'm going to hope that you guys have downloaded the various web links. I'm going to just hide this pod. If you do need them, please send me an email and I can hook you up if you weren't able to get those yet. So just a big thank you to everybody on the call and also to the 3 presenters for offering your time and your expertise. As I said, today's session was the second last in our Creating a Blue Dialogue webinar series this season. Our next webinar is going to be happening next month. And it's going to focus on media engagement and water law reform. And I'm actually going to be switching roles for that session. I won't be in my usual wearing my usual moderator facilitator hat. I'm actually going to be presenting along with Dan Fiumano, who's a reporter with the Province newspaper. So we'll try to get that promotion ready in the next week or so and get those full details out to you so that you can register if you're interested in that. So speakers, do you have any final comments or thoughts?
Not for me, thanks.
No.
Nope.
Great. So thank you once again to all 3 of you, and I hope all of you on the call have a really wonderful day. The session was recorded today, so we'll be in touch when that's available. Thanks so much.
Thank you.
Bye now.